are the common questions raised during the past exams. Hopefully, by deep diving into these questions, it will give you a flavor and help you to prepare for the upcoming exams easier. Without further delay, let us look at the first question, which is adapted from the December 2024 paper, question 3A. For the next 20 to 40 minutes, what I'm going to do is go through the question in details, highlight the area that you need to be aware of, as well as going through the presentation of the answer, as well as concepts that hopefully you will remember in the next round of paper and examination. This is so that you will be able to familiarize yourself of what's being asked and how to actually ensure that you have the sufficient knowledge to tackle those questions. For question 3A, let's deep dive into it. CVS Pharma Private Limited, or CVS Pharma, a Singapore incorporated company, is a wholesaler and retailer of consumer healthcare products. It sells directly to retail customers through its website and through retail outlets in Singapore. CVS Pharma is a goods and services tax (GST) registered company. It has also opted to apply a reverse charge on all its imported services. The following transactions were conducted in the quarter ended 30th April 2024. Unless otherwise stated, all purchases made in Singapore were from GST registered suppliers, and all sales value stated are exclusive of GST. The company's policy is to claim all available input tax credits. Sales of healthcare products where deliveries were made from Singapore during the quarter. There were 3 sales. I1, sales to Singapore distributors worth 980,000 before a 15% sales discount was given. I2, sales of 580,000 were made to Singapore customers via the website where GST was absorbed. I3, sales of 700,000 to overseas customers where goods were shipped to customers within a week of receiving the orders. Clearly, these are 3 different scenarios of sales where you will need to consider if output GST needs to be charged and determine the value of supply for determining GST purposes. Next, goods purchased from a supplier in country K and delivered to number 2-1 Singapore, cost of 490,000 and freight charges of 45,000 paid to an overseas freight forwarder. Country L, cost of 520,000 and freight charges of 55,000 paid to an overseas freight forwarder to deliver the goods directly to customers in country L. In this part of the question, clearly, it's in relation to your purchase of the goods from both supplier in country K. The 2 different scenarios accounted for part 2.1, where the goods were delivered to Singapore, and part 2.2, the goods moved physically from country K to country L. You will need to then establish if there are any input tax associated with both transactions. 3. Rental income of 45,000 for the quarter from the sublease of excess shop space in one of its retail outlets. So this is an income derived by CVS Pharma from renting out its excess shop space. The question to be addressed here would be whether or not the 45,000 should be subject to GST. Next, cash received in March 2024 with respect of the following: 30,000 refundable security deposit for sublease of shop space, 20,000 deposit for the sale of goods to a Singapore customer to be delivered in May 2024. You should note that for part 4, it talks about cash receipt. And there are 2 scenarios of cash received where 4-1 is the cash received from refundable security deposit CVS Pharma previously paid for subleasing of shop space, and that's 20,000 deposit for the sale of goods to a Singapore customer, which will then be delivered in May 2024. 5. Cash received of 2,700 from the sale of scrap packing materials. 6. Legal and estate agents fee of 8,000 relating to the sublease of shop space. 7. Consultancy fee of 25,000 paid to a lawyer in country Z for advice on setting up a branch office in country Z. 8. Interest expense of 13,000 paid to OCBC Bank Singapore for working capital loan. 9. During a month-long promotion at its retail outlets in March, the company gave away healthcare products and water bottles worth 15,000 as lucky draw prizes. Each recipient stood a chance to win prizes valued at no more than $80. Take note for 9, this would be business-related giveaway, as they are doing a month-long promotion at its retail outlets targeting at its customers. 10. Donation of 20,000 to an institute of public character, which has two components. 10 part 1 cash donation of 8,000 and 10 part 2 stocks worth 12,000. The stocks were imported from country K in the previous quarter. So what is clear here is you have imported the goods from country K into Singapore. Very likely GST would be paid on those goods when the goods entered Singapore at the customs. Therefore, the question would be whether or not the two different donations would attract any kind of output GST for CVS Pharma. Number 11, bad debt written off in respect of sales of $13,910 made in Feb 2023 to a non-GST registered distributor in Singapore, as the distributor was declared bankrupt. So this tests your knowledge about whether bad debt relief for GST would apply. So question 3, after we have gone through the facts, we need to look at the question. So if you take the time to look through several past year exam questions, you will notice that the examination requires you to present your answer in a particular format. Therefore, it is very important that you familiarize yourself with this format. Going through the question, for each of the above transactions referred to by the Roman numeral code and with reference only to the quarter ended 30th April 2024, provide your answer in the following format. Here, you will see the table and they allow you to copy the above table into Excel to prepare your answer. When there is no taxable, standard rated, zero rated, or exempt supply made or there is no input tax to be claimed, please take Y under the column marked others using the following abbreviations. OS, out of scope. NS, no supply. BL, blocked. ZR, purchased as zero rated supply. EX, purchased as exempt supply. EXS, incurred in the making of exempt supply. Using the abbreviations indicated in the legend and the following example transaction as a guide, this is how you should present your answer. So they take, for example, number 11, purchase from a non-GST registered supplier of 300. The first column, you need to write down the transaction reference so that the examiner can know which line you're looking at. The others is the type of supply, if it's not standard rated, zero rated, or exempt. Next, the output GST value if applicable. Next, value of taxable purchases if applicable, and input GST if available. So in this line, purchase as exempt supply, EXS, how you should. The first column, you need to write down the transaction reference so that the examiner can know which line you're looking at. The others is the type of supply, if it's not standard rated, zero rated, or exempt. Next, the output GST value if applicable. Next, value of taxable purchases if applicable, and input GST if available. So in this case, you are actually purchasing from a non-GST registered supplier. You will not have any input GST. Okay, with that, let's move on to look at the model answer. So as you can see in the suggested solution, which is available to all of you as candidates, you will find that they actually map out each and every one of the transactions that we have just referred to in the earlier slides. So let's go through them one by one. For the first sales of 980,000, they have determined that the value of the standard rated supply is 833,000 and the output GST is 74,970. Why is it 833,000 and not 980,000? For those of you who do not remember, the question mentioned there was a discount given. The value of the supply is the net amount that you're collecting from the distributors. Therefore, you need to take the discounted value and apply GST on the discounted value. Next, for the sales of 580,000, again, the standard is a standard supply, which I believe all of you would be able to land on that outcome. But the question is why, again, is it not 580,000, but rather $532,110, and the output GST is 47,890. In order to find the value, you have to go back and read the question where they say GST is dissolved, meaning the 580,000 that you actually charged includes the GST. Therefore, you need to mathematically back it out and find the value of supply and output GST. What it means is the standard rated value, if you add that with the GST, it will total to 580,000. Next, sale of goods of 700,000. I think this is clear. It relates to zero rated supply under the ZR column. So I would like to go slow here so that everybody can see where the values are to be filled and how to account for output GST if applicable. Next, purchase of 535,000. So the value of the taxable purchase is 535,000 and the input GST is 48,150. What is notable here is the value of taxable purchase includes freight charges in addition to the value of the goods. Next, for the purchase of 575,000, clearly there is no input GST to be accounted for. A reason being the goods did not enter Singapore. It moved from one external location to another external location. Next, rental. So the company CVS Pharma sublet space of its excess shop space to another party. So the value of the supply is the rental they collected 45,000 and the output GST is 4,050. So the question is GST applicable on the rental? The answer is yes, on the basis that this is rental of a non-residential property. Remember that if this is a residential property, there will be no GST applicable. Next, for deposit of 30,000, clearly it's not a supply. Next, for the 20,000, the amount received, yes, it is considered a taxable supply, but you need to bake in the account for the GST because at the time that the deposit is received, it's considered payment for the goods, and therefore it will trigger GST obligation. Next, scale of scrap materials. I do believe that everybody agreed that standard rated supply. Again, how do we arrive at the value of standard rated supply being 2,477 with output GST of 223? This is where you have to be very careful of what you read. The question states that you obtain or rather you receive cash of 2,700. Therefore, if GST is applicable, it's included in the 2,700 that you received. Next, fees of 8,000. That's considered taxable purchases. That's why it's in that category. And then you account for input GST because it's associated with your rental income, which is a taxable supply. Next, for the fee of 25,000, clearly this is paid to an overseas party. And for imported service, if you recall, as per the question clearly states that the company would opt for paying with reverse charge GST or imported services. So reverse charge GST is the concept whereby a company would account for GST on services imported into Singapore because the other party, the foreign company that provides the service, is likely not to be GST registered. However, because CVS Pharma is making taxable supply, any GST that's self-accounted for also available to CVS Pharma as a credit. As a result, you will see that we will account for output GST at the value of 9% of 25,000, which is 2,250. At the same time, we also accounted for taxable purchase of 25,000, input GST of 2,250. Therefore, this clearly indicates there is no financial impact to a company making taxable supply for paying GST on imported services. And this is how you should reflect it. Basically, you provide a deemed output tax as an imported service, and then you claim it as taxable purchase and utilize it at the input tax. Next, for interest expense, clearly interest expense is a form of exempt supply. Next, lucky draw prizes. Take note, this is lucky draw prizes in relation to business giveaway. Despite the fact that it is 15,000, there is no deemed supply on business giveaway because each recipient only gets not more than $80 in value of the free gift. Next is the donation component. So for the donation component, there were two parts of it. One is the cash donation. Second is the donation of stocks. For cash donation, it's pretty clear cut. It is not a supply. Recall the fact that in a situation where you're making a cash donation to an institute of public character, you are deemed not to receive any benefits, and therefore the cash donation would not be considered a supply. However, for donations in kind, specifically stock donation, it will be considered as a deemed supply, and you need to account for output tax, which is basically 9% on the $12,000 worth of stock. Last but not least, we look at the bad debt relief written off, where you have written off a bad debt amounting to $13,910, and the associated GST is $1,113. So in this case, we need to determine one, has GST been previously charged? The answer is yes, because this is a Singapore customer. There's no basis to assume that no GST was charged. Next, what's the duration of the bad debt being outstanding? Clearly has been outstanding since Feb 2023, and it has been declared as a bankrupt. Therefore, the company has turned insolvent, and assuming that CVS Pharma has undertaken all the relevant steps to recover the debt, which I believe is evident from the fact that CVS Pharma is aware of the company being insolvent, CVS Pharma should be entitled to the bad debt written off, GST relief, and therefore that will form part of the input tax claim. So with this, I have come to the end of the first question, and a special call out to some of the common questions that candidates have raised in my other sessions. One, is this format required? Can we present the answer in any other format? The answer is yes, this is the format required as per stated in the question, and you only need to fill in the columns which are applicable. So one thing to note is, as you can see, if you are taking the component that relates to output tax, you will be filling the relevant component, which is the value of supply made, etc., output GST, whereas when you're talking about purchases, it will be more of the last two columns, which is value of chargeable purchase and input GST. So you need to understand what transaction you're dealing with, analyze the GST impact, and fill in the correct column. Now we will move on to cover the next question, which is a question of June 2024, question 3. In this question, we're talking about Parfait Bakes PB operates an artisanal bake shop offering a wide range of bespoke cakes and baked goods. Their products are sold online as well as through a physical shop in Singapore. PB is a goods and services tax (GST) registered business that is currently entitled to full input tax credit. What this means is that it does not make any exempt supply. It seems it also has opted to apply a reverse charge on all its imported services. The following transactions below were conducted in the quarter ended 31st July 2023. Unless otherwise stated, all purchases made in Singapore were from GST registered companies, and all purchase, sales, and income values stated are exclusive of GST. Now, there is a need to distinguish that while purchases, sales, and income values are exclusive of GST, for cash receipt, you will need to determine if the cash receipt itself has a GST component based on the facts of the question. Now, moving on to examining the transactions. Transaction 1, sales worth $320,000 through its physical shop to customers who were not GST registered. 2, online sales worth $180,000 before a 5% discount. 3, received cash of $8,000 from the sale of various cake display chillers to local customers. 4, cash deposit of $13,000 received for wedding cake worth $26,000 to be delivered on 15 August 2023. The invoice will be issued in August. 5, invoice sale of $5,000 for a birthday cake on 10 May 2023, where a cash deposit of $2,160 was received in April 2023. Interest income of $3,000 from deposit placement with DBS Bank Singapore. Compensation of $800 was received from a supplier for late delivery of supplies to PB. Imported butter and flour from country X at a cost of $54,000, which includes freight charges of $4,000. Donated unsold baked goods worth $4,000 to your charitable organization. Unsold cakes worth $210 were given to a member of staff. 11. Meals costing $3,800 were provided to staff who were working overtime. 12. Accounting software subscription of $330 paid to a company tax resident in country Y. 13. Purchase new refrigeration equipment and cake display chillers worth 35,000 at a 10% discount. 14. Staff uniform expense of 20,000. For each of the above transactions referred to by Roman numerical code with reference only to quarter ended 31st July 2023, provide your answer in the following format. By now, you should see that this format is exactly as the same as the other question we discussed for December 2024. Therefore, as mentioned, it is critical that you familiarize yourself with this format even before your examination, as it will prove to be very useful in setting up the answers for this question during the exam. Next, as usual, we'll go through what NS is no supply, BR is block supply, ZR will be purchase that is a zero rated supply, EX purchase that's exam supply, EXS incurred in the making of exam supply. And next, they also show you an example of how you should be presenting the answer. For example, when you are documenting a purchase from a non-GST registered supplier, you need to put the reason as OS, and your taxable purchase is 0, input GST was 0 because it's from a non-GST registered supplier. You have not been charged any GST, therefore there is no taxable purchase and therefore correspondingly no input GST. Similar as the last question, there is a need for us to deep dive into each and every of the transaction to understand where does it stand from a GST angle. Now, we'll now look at the suggested solution. So for the sales of 320,000, clearly this is a standard rated sale. So you need to put the value down in standard rated supply column and compute output GST, which amounts to 25,600. This should be straightforward and non-controversial. Next, we have a discounted sales situation where the pre-discount price was 180,000 and you were told that PB gave a 5% discount. In this case, the value of your supply that you determine GST on should be the discounted value, which is 180,000 minus 5%, and the answer is 171,000, with the corresponding output GST of 13,680. Next, cash received from the sale of display chillers. So clearly, the sale of display chillers should be considered standard rated supply. However, the question here is what is the value of those chillers? From the question, you will note that PB was paid 8,000. Therefore, the value of the supply plus the GST should give you 8,000. And of course, applying the mathematical formula that 8,000 is 109%, you will derive the answer of standard rated supply of $7,407, and the associated GST is 593. Next, cash deposit received of 13,000. Again, in this case, the 13,000 you receive is actually 109% as cash deposit for a taxable supply would trigger the rule in terms of time of supply, where GST is to be accounted for the earlier of two instances: 1, issuance of tax invoice, or 2, receipt of payment. Given that the cash deposit amounts to receipt of payment, there is a need to account for GST. Therefore, again, the value of the supply is $12,037, whereas the output GST associated with this transaction is $963. Next, it involves a situation where you are invoicing for the balance. Therefore, you need to first calculate what's the total value of the supply and then minus off the GST and the amount that you previously accounted for. So given that we have accounted for 2,000 when we collect the deposit earlier, the balance 3,000 should be included in this quarter's return, giving an output tax of $240. Next, interest income from DBS should be considered as exempt supply, and there is no associated output GST. Compensation from supplier is not a supply, therefore there is no GST implications, both on the any supply made as well as value of taxable purchases. Next, on import of ingredients, given that the total value including freight cost is 54,000, that should be the value of your taxable purchase, and the input GST you have paid at the Singapore Customs will be $4,320. Next, for donation of unsold baked goods, that will constitute a deemed supply because it is a donation in kind to a charitable organization, and the value would be the value of the unsold baked goods, which is $4,000, and the output GST is $320. For unsold cake given to staff, again, it is treated as a standard rated supply because it exceeds the threshold of $200. Therefore, applying the GST amount on 210, it would be considered as a $17 of output GST. For meals provided to staff, that is considered a taxable purchase, and the whole value, any GST incurred of 304 can be claimed as a credit. Next, we come to accounting software subscription imported. So again, this is a situation where the company is purchasing an intangible or service from an offshore service provider. Based on what the question has stated, the company has elected to reverse charge GST for imported services. So the concept of reverse charge is such that any GST that will be accounted for on the behalf of the foreign party by the taxable business should not be cost to the business, because the amount of output GST would then be an input GST credit to the business. So in this case, as you can see, it's important that you record two legs of the transaction, where there's a deemed output tax, right, on the value of 330, with the output GST as 26, and the value of taxable supply or purchases being the same value of 330 and input GST of 26. Based on this entry itself, as you can see, the taxable business, in this case PB, do not need to pay any net amount to the inland revenue or claim any refund, as the output GST is equivalent to the input GST for this particular transaction. Next, for purchase of equipment and chillers, clearly this is a local purchase. However, as you can see, similar to the earlier portion where PB gave a discount on the sale of its goods, if we receive a discount on its purchase, the value of the taxable purchase should be the discounted amount, and that means it's now $31,500 with GST of $2,520. On staff uniform, 20,000, clearly it is actually standard rated. Therefore, you would be able to claim input tax at 8%, that's 1,600. In this case, we have added up everything as a suggested solution. However, for the question, it did not state that you are required to. Therefore, I would recommend that for good measures, you can definitely sum up all the input output tax value in the last column, in the last row, for ease of reference. So I believe that today, with the two GST session, we have walked across the GST regime in Singapore at a very high level. What we have covered would mainly be the type of supply under the Singapore GST regime, namely standard rated supply, zero rated supply, out of scope supply, exempt supply, as well as not a supply. We also look at the various factors which determine when GST will be applicable, such as the place of supply, the time of supply, and the value of supply. All these concepts would add together to allow you to determine the output tax of a GST registered business. Next, we move on to consider what are the type of input tax that a GST registered business would encounter, and looking at the general rule in addition to what specifically blocked under the GST regulations. It is important that you familiarize yourself with what's claimable and what's not, so as to prepare for the upcoming examination. Then we also look at some of the administrative requirements, such as when is your accounting period, when would it be due to file your GST return, and also we look thoroughly at a situation where a business would be making more than one type of supply, right? This would then lead to us applying the de minimis rule, where conditions have to be met in order to establish if the business is allowed to claim its input tax in full despite making exempt supply, or is it required to actually identify the input tax associated with its taxable supply and apportion all the residual input tax tests. So all this, when viewed in totality, should give you a very high-level overview of Singapore's GST regime. Next, we also consider how to practically apply those concepts we have discussed in the first part. In the second part, where we've gone through two questions from the past year exam paper, namely the December 2024 paper question 3 and June 2024 question 3. While the questions significantly differ in terms of facts, it is important to note that there is a standardized format that you are required to input or prepare your answers in, and it is critical that you familiarize yourself with this format even before the examination so that you can quickly assess the transaction and fill up the relevant section on the table on the exam day. It is also important to read the facts very carefully. Things like the values excludes any GST applicable and differentiate between cash receipts versus the amount charged or billed. This is because for a cash receipt situation, the total amount, if GST is applicable, would include the value of the supply and the associated GST. Last but not least, you also need to address the situation of reverse charge, where a company elect to account for GST for services purchased from overseas. With that, I would like to thank you for your time and hope